Hey everybody, happy Monday to you. And if you're a cannabis investor, it's a very happy Monday. Why? Because it must be just a matter of time till you are
selling your portfolio,
put out of your misery by your broker who's basically going to cancel your margin.
Well,
and
remember the adage, the broker you know, the broker you get.
Until you find yourself broken. Completely broken. Yes, indeed, folks, step right up. We have a spectacle underway. It's the cannabis market in full meltdown at top speed. Canopy Growth below $20. We got MedMen at a buck.
Is it under 19? I think it's 18 and change.
It was 18 and change. We got Aurora down at 3 and change. We've got a bloody bloodbath on our hands is what we've got here.
Is it another bloodbath?
Another bloodbath.
But I saw...
Bathing in blood.
I saw C-Web go by up $1 today.
Well, here's the interesting thing.
A few
you want to
US
see
ones?
green, you have to look south. Charlotte's Web, True Leaf, Cure Leaf.
The one that went to 300.
Green Thumb Industries. Nope, Tilray's not participating. No.
I heard it was up.
Well, it might be up slightly, but it's not participating broadly like those, the small, you know how you call the big tech companies in the United States, the FANG companies? Let's see, we've got G, T,
Should we have something with J,
C.
U, N, K? Junk.
Oh, we need one vowel.
Which one?
Anyone. There's none of the cannabis companies that are meaningful.
Acreage.
No, Acreage is participating with the chaff, not the wheat.
You mean it's in Canada?
No, it's falling in price.
I know, but there's your vowel.
No,
Acreage.
but our group of stocks have to be those who are continuously powering forward.
Okay,
and
keep changing it. Well, I come up with the answer. You say, no, not that.
Well, no. It's like we're talking about the, so Cure Leaf is up. True Leaf is up.
Oh. Acreage isn't.
Green Thumb Industries
you want
is
the ones that are up.
Ones that are up.
Right.
Yeah.
Right.
Yeah. Anyways, so let's take a quick look at the indexes here.
Okay, let's do that. Now, I got somebody here under the desk,
All right, so, okay, so Midas Letter, small cap.
Oh, did you really?
Oh, how about that?
What do you
Hey, Cam, could you guys go in a room, please? Yep. Thanks.
Thanks, sir.
We're having a show. Okay, so let's see here. NDI. Fuck. Okay, there it is. Now we have our finance thing. All right, where were we? Yeah, okay, so there's the picture there's the story right there. The Midas Letter small cap index is down a whopping 6%. The large cap is down a whopping 5.6%. The venture index is down 4.1%. The CSE index is down 2.43%. So you notice that the CSE, in this context, is the best performer. Why? Let's look at the index page. And the reason why is those companies that I was just talking about, Cure Leaf, Green Thumb, True Leaf, and GTI, Cure Leaf, Green Thumb, True Leaf. Okay, so actually, GTI is not up, it's down 0.34%. But these are companies that have lost less than 60% of their value since they continue to report positive development. Cresco Labs is actually trending positively now, but these guys have managed to maintain higher market caps, and so they're the only real green in this entire industry is on the CSE, thanks to the American stocks.
Isn't that amazing?
Yeah, but on the bright side, and this was actually a story I started following last week. Where did it go? Had it in front of me, lost it now. Yeah, so there's a vote to federally legalize marijuana planned in Congress for this Wednesday, which could be positive, which could be not positive. The key congressional committee plans to hold a historic vote on a bill to end the federal prohibition of marijuana next week. The legislation is sponsored by the House Judiciary Committee Chairman Gerald Nadler, who's a Democratic New York senator. And the bill would see cannabis removed from the Controlled Substances Act and set aside funding to begin repairing the damage from the war on drugs. Now, there's a reason, and it says here, which has been disproportionately waged against communities of color. Now, there's the reason why I don't see this bill proceeding is because they're looking for funds to be set aside.
Funds.
Funds.
Like,
you know, the
so funds.
Republicans are not renowned
Do
for
you think
setting
it's
aside
they're called funds because funds give you fun?
as opposed to bores.
Or trouble? They don't call it rubles. Maybe ruble sounds like trouble or something like that.
Rubles?
Troubles.
Troubles.
I got troubles.
Like, you got troubles. I got troubles at Jingle Jangle Jingle.
Wow. While this weed poke its head back up, how?
Well, don't look at that because that's a full
Okay.
20 minutes to half an hour behind.
Whoa.
And so, yeah, if you're going to look at anything, look at your trading view charts because
Yeah.
they are live.
You know what? And it kind of makes sense too because, like, if you're an international investor, what are you going to do? You're going to go to the U.S. and buy some American marijuana companies or are you going to come into Canada and
exactly.
roll in the shit?
Let's pull up a chart here of Aurora.
Okay. Hey, Aurora. Here we go. Aurora. ACB. I'll do the Canadian one. Might as well. Okay, that's a small chart. Let's do it's 6 month, 3 month, 1 month. Wow.
I am looking at the 3 day. I'm looking at 2 days here.
Okay, I'm going to put a 5 day up because I don't have 2 days. Do I?
And it looks like, there was a bit of a reversal here, except that it didn't last.
Yeah, it's $3.06. Ooh!
Yeah,
Look out below!
So look at it. It was on a bit of an uptrend from last week. If we look here, and look, there's a green bar. Wait a sec. Let's go to the 3 month look.
Okay.
And we will put it onto a.
I show 305, 306. That's the current bid ask.
Yeah. Okay, there's the story right there. Show screen brush option. That's not right.
Is that down 14% today?
Okay, look at that. Yeah.
What did they announce?
Look at my NDI.
Wow.
Look at that sucker.
You see, when it breaks those key support levels, like we saw here, I'm.
Anyways, that's just plain ugly. So let's see. Let's recount how absolutely miserable our market has actually become here. If we look at our indexes, damn, I have that thing on and it doesn't work.
Why isn't my pen working?
Why isn't the market going higher?
Why? Because I guess the pens are out of. Wow, look at this thing. It was $4.50.
Okay, so in order of, let's see, Alliance Growers is up 66% today, but it's a 3 center, so it doesn't really count. WikiLeaf is up 35%, up 3 cents to 10 cents. So, I mean, there's like, remember Isodial? What was that trading at? $3 and change back in April?
What are we at now?
18 cents.
Really?
Yeah.
I wonder, the people that really, this isn't even funny, but we did say many times, if you're losing sleep over this, get out, sell.
Well, maybe some people were staying up late to watch, so they couldn't, they weren't losing sleep, and so they thought, buy. I mean, you got to think that if the I mean, there's just no reason to believe, though, that the end of December is going to bring any, is there any reason for a bounce in the stocks?
Yeah, well, you should get, after the tax loss selling, there usually is.
Yeah, but okay, so let's look at Canopy Growth. 300 and call it 7.2 billion market cap. $85 million in revenue in the last quarter. Is that worth, let's see, so call it 85, 170, 340. So call it almost a dollar per share in revenue. Is that worth...
What's the stock at?
Is that worth a 20x lift? The stock's at, right now, let's see.
I keep... I'm not getting the interaction ability. When I click on my little pen, it's not happening. So we're going to have
to... There's no lead in your pencil, maybe.
We got put some lead in your pencil. Are you shooting blanks there, young fella?
Okay, so Canopy Growth is at $14.34 US.
Really?
Let's see what the Canadian peso equivalent is to that. 1882. High. Can you believe that?
I'm gonna have to I'm restarting.
Really? $18.82 a share.
So dollar share revenue, you know, very few things after things mature trade at 20x or 18 or 19x revenue. You know, I've 2, 3, 4 maybe. But unless you're in a bubble, while you're in a bubble, you can get crazy valuations, which we've just seen. Now things are coming back to earth, or down to earth.
Back to earth.
Back to you.
This is ground control.
We have a buddy. I'm not going to mention names because I don't think
I'll know who it is. Well, I know who it is.
He lives down in Jensen Beach, and they just said Curaleaf opens Jensen Beach's first medical cannabis center. Curaleaf.
Oh,
just went across.
So we'll be able to go visit get some weed while we're there.
Well, just to say, you know what? You go to the beer store, load the liquor. I'll go down to the dispensary and do some dispensation. Yeah, so here's an interesting little fact. As of a short while ago, there were 8 stocks on the TSX Venture that had traded 100,000 shares. Yeah, I think you mentioned that to me about an hour ago.
Yes, but I'm telling them.
No, but I'm saying just for the time, so maybe there's one more now.
Oh, yes. Let's see what our friends here have to say. This is not for, let's see here. Actually, I know how to fix this. Great. Okay, so let's take a look now. Here we are nearing the end of the day and another 45 minutes to go in the market. And if we were to look at the highest trading stocks on the TSX Venture today, there are now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Now there are 14 stocks that have traded over 100,000 shares today. But at 2 o'clock, that number was less than 8, and at noon it was only 7.
And how many are now?
13.
Wow, things are really picking up.
Things are just bumping and grinding higher. Now, most of the companies have nothing to do with cannabis that are on this list, with the exception of Valens Grow, who's up 5 cents today at $3.08 per share at this moment. Enwave Corp is technically kind of in the cannabis space. The Flower Corp is down 7 cents to $2.58. And that's it for the cannabis companies trading on the TSX Venture. On the CSE, there was more companies that had traded 100,000 shares, but yeah, I know don't want this up. So MedMen is trading at $1.01 per share. $1.01. About to slip beneath $1 on 2.1 million shares traded. Harvest Health and Recreation down 18 cents to $3.55. Trulieve holding strong at $15.25, only down 8 cents on the day, $15.19 now. Curaleaf is up 14 cents to $7.72.
Well, I was going to make a suggestion.
Oh, what was that?
I was going to say maybe we should call up some CEOs when we're on the show.
And see if they pick up the phone? See if they want to talk to us?
Yeah.
Anyways, we had a excellent chat with Matt Bottomley cannabis analyst.
I like that. That's a great guy.
He's a great guy.
Yeah.
He's a cannabis analyst at Cannaccord Genuity, and he is nonplussed by it all. Here's that conversation. I'm joined now by Matt Bottomley, Managing Director of Equity Research at Canopy Growth. Matt, welcome back.
Thanks for having me.
Matt, the weakness in the cannabis space continues unabated. What's the upshot from where you sit?
Well, obviously there's a lot to parse through in terms of what we've seen in earnings, what we've seen with negative headline news when it comes to facility licensing, guidance being pulled, things like that. So a lot of the names are in the penalty box right now, and this has been a sector since I've been covering it, that once you're in that box, it's very hard to get out of it. So I think the near-term sentiment in terms of potentially seeing more bullish nature come into the sector will be probably more in the U.S. names. Even those are trading down quite substantially, because although the fundamentals, particularly on a pro forma basis, are more attractive than in Canada, the balance sheets are much weaker on average because they're not, on major U.S. exchanges. They're not able to raise capital at the same ease. We have some of the, chartered banks out of Canada here actually lending to some of the licensed producers. You're not going to see that anytime soon, at least in my view, south of the border. So I think right now in the Canadian sector, there's not a lot to be excited about until these new product forms and more retail dispensaries open up, particularly in Ontario. And I think on south of the border on the U.S. front, we might see some excitement in the space, maybe towards the end of the year, maybe a little bit before then, depending on what the print is this week during earnings and depending on what these companies do with their balance sheets.
Sure. Some of the larger incumbent companies have a combination of large debt issuances coming available in the next 2 to 3 years, plus looks like they've come close to running out of cash, especially in a market where there aren't anybody who's willing to write a check. Do you think that there's an existential existence facing some of these companies?
Well, I think definitely if you look up the dozen or so, probably multiple dozen Canadian licensed producers, there might be some plays here where you have someone that has certain purchase orders in a province or certain brand recognition once brands start being a real thing that might be able to facilitate some M&A or maybe some merging of equals. But there's a lot of people that have, or a lot of companies, I should say, that have invested, whether it's 10 million, whether it's 50 million plus, into facilities that, quite frankly, in my view, are going to be underutilized once all is said and done, because this is going to be a continued painful environment until we see more retail stores that are able to facilitate incremental users coming in. So I think that there's definitely names that have been trading off that potentially could be good value plays, and there's names that are trading off that probably have a long ways down further to go. So execution is going to be big across the LP front and just positioning in this market, because at the end of the day, it's fine if you can make 20,000, 50,000, 100,000 kilograms. The way that I'm looking at this sector is, what's your market share going to be? What's your consumer mind share going to be once we start having vape pens and edibles, and once these things go from looking like a tobacco store where everything looks very illicit even in the legal sense to something that maybe looks a little more like the beer store or the LCBO. And that's going to take several years to play out, obviously, but I think we're going to get a first look of that come Q1 of 2020.
Okay, so US names like Trulieve, Curaleaf, Green Thumb Industries have obviously created a better runway for themselves in terms of the growth of revenue and the development of profit, we'll call it. There aren't any names in Canada who have a similar sort of trajectory, at least looking at the last few financials. Are there any Canadian names that you consider still a buy that might not be some of the default or more commonly known ones?
Well, I still think that the Canadian licensed producers as a group are still going to be leaders in many fronts when it comes to global expansion initiatives. The balance sheets are much stronger. You have Canopy with $3+ billion, maybe $4 billion of cash, depending on where these warrants may or may not come in. You have Kronos that has over $2.5 billion. So there's a lot of damage that could be done, and I mean that in a positive way with respect to getting into health and wellness, CBD. We're starting to see more licensed producer invest potentially south of the border. So I think that there is a significant growth profile right now for the Canadian licensed producers. It's just more unknown than what that growth profile is for some of the MSOs. You look at Cresco. We know Illinois is going to be legalizing recreational cannabis for January. We know that they're having they have some of the better license and penetration into the state, and other MSOs as well that have done it via acquisition. So yes, there's going to be bumps in the road, and anything that involves something this highly regulated, there's always unforeseen issues, but at least that's sort of the arena they're playing in. We don't necessarily know all of the arenas the licensed producers are playing in, and if you you just want to be ultra conservative, and there's definitely a reason to be, and look at the Canadian domestic opportunity, it's very bottlenecked right now and very unattractive with respect to its, let's call it near-term growth, as what's going, related to what might happen in the next 6 months here. I don't think there's a lot to look forward to other than the initial launches of products and new product forms, which again is going to take us a quarter or two to really decipher once that hits the tape.
Sure. There's a vote by a congressional committee coming up in the United States on Wednesday, and do you think that that Marijuana Opportunity Reinvestment and Expungement Act is going to constitute any kind of catalyst for U.S. companies, at least initially, and possibly some spillover into Canadian ones?
Well, I would think so, hypothetically, but when you look at the sector right now that we're in, unfortunately, it is dominated by negative news headlines, and because of that, even the ones that are positive, there's a bit of capitulation in the space where people might be excited about a potential positive headline on Wednesday, but they're more afraid of what they don't know is going to come out on Thursday with respect to what we saw with Hexo last Friday, and then even before that with pulling their guidance and some of their layoffs. So I think that fundamentally it should matter. Now you have to keep in mind this is a House vote. It's the Senate is controlled by Republicans. This is a co-sponsored bill. This is a bill that I think has 55 co-sponsors, so a long way to go to get it over the goal line there. So nothing's going to happen this week with respect to getting legislation over the goal line. There might be some airtime for it, and it might hit the news headlines, which again is positive if more people are really factoring in that this is a sector that's starting to destigmatize when it comes to political acceptance and state-by-state acceptance, and I think eventually there'll be federal acceptance. So this should be positive for the sector, but I wouldn't hold my breath thinking these stocks are all going to go up 50% on whatever happens on Wednesday.
Right. I've noticed that some of the extraction stocks, MetaPharm Labs, Balance Grow, are looking better in terms of the evolution of their operating statements and everything. Is there a reason to be more attracted, do you think, to the extractors who have focused on both toll extraction as well as developing their own product lines?
I think there's pluses and minuses to both, because right now $1, if I'm an out licensed producer and I sell a product to another licensed producer, I know this isn't the tolling specifically, and I make $1 of profit. To me, that's not as valuable as $1 of profit that eventually gets derived to an end user. So I sold something to a provincial government, made $1 of profit, that goes to an end user, that end user uses it, hopefully likes it, knows the brand a little bit, maybe they know your product skews a little bit more than they did before, and that helps build the brand equity and probably brand awareness. So I think these toll manufacturers, like the companies you mentioned, it'll be more critical for them to implement and execute on their own products. Why I like those names as sort of a near-term investment opportunity is because there's a little more certainty with it. You get a tolling arrangement, we know that it's going to take some time for all the capacity and extraction abilities in the sector to ramp up. So, if you have a Valians or a Labs or whoever, announce certain tolling arrangements, there's more certainty as to what is actually going to be in the print in the next couple of quarters, as opposed to licensed producers, which I think don't even have visibility 3 months from now. I think the whole reason why there's been surprises, whether it's Aurora or Canopy or really anyone that's reported their September quarter now, is you can barely, even forecast directionally whether the revenue is going to go up or down, let alone percentages and margins. So it makes it a lot more challenging. So those names are a little more easier, but I think there's less long-term value for those names unless they get their own independent brands up and running, which they very well may.
Outdoor-grown hemp in the U.S. and cannabis in Canada, as both the year's harvests have demonstrated very clearly that this is super low-cost weed relative to that grown indoors in higher-tech facilities. Do you think that these companies in Canada that are growing outdoors on large operations, WeedMD, 48 North, Aurora's theoretically got a large grow that's going to be planted this year, do you think they're going to be in better shape to compete in the extracted product market because of their lower cost of input?
Perhaps, but to me that's all a consideration of timing. At the end of the day, I think this market's going to ramp up. There's going to be probably more capacity than that's needed. I don't think anyone would debate that. The pricing is going to come down. The wholesale pricing is going to come down. And if you are someone like a Canopy or Aurora, and 6 months from now, a year from now, you still have a 20 or 25% market share, that's more valuable to me than being a low-cost producer, because you're going to find those low-cost inputs once we have a saturation of supply and infrastructure. So the WeedMDs of the world, those types of companies that are already trying to position to do themselves today. I think as long as they can translate that into market share to the end user, fantastic. If they still only have 1% market share a year from now, it doesn't really matter what their cost base is. They'll be very profitable on 1 gram sold. With no disrespect to WheatMD, but just companies of the like that still have a ways to go in ramping up their share.
Sure. The market in general, the sector in general, has lost now above 80% in most cases of its value from April highs. Do you think that what's happening right now constitutes a sector-wide capitulation, or do you think that there's still a lot further that the sector could go come the new year?
Yeah, I think sector valuation-wise, we are at a place where I think it's a little more, I mean, obviously it's 80%, like you said, it's a more comfortable discussion to have. You don't have to hope the German opportunity lands. You don't have to hope that an Australian opportunity or a LATAM export opportunity, because there's a lot of optionality with these names. So for some of these names, you can actually look at, okay, what's 10% of the Canadian wholesale value worth if you're sort of a mid-tier LP, and it's an easier discussion to have. The problem with that is there's a lot we still don't know with respect to where pricing will go. Obviously directionally down, but how far down it will go, we don't know exactly how the ramp up in these new product forms are going to shape out, because a lot of that is a function of, as I've mentioned several times, the retail infrastructure ramping up in a way where we can actually get new users into this market. So I don't know if I would necessarily call a bottom here. I think it's an easier bottom to call for the US names, because you're going to have, on a pro forma basis, EBITDA numbers in the hundreds of millions, maybe 100, 200, 300 million next year for some of the leading operators. And if they ever get to a point where their market caps are $500 million or less, I mean, it's a pretty easy valuation argument to make. With the Canadian companies, you look at Canopy, who's effectively a leader in the space, not necessarily on its financial metrics, but certainly in its positioning. And this is a company that very likely, even based on management, a year from now will not have $1 of EBITDA or profit from operations. So it's going to be an interesting environment out there when you look at a company like Canopy that has the constellation, has the strategic investment, has potentially international optionality with no profitability, compared to a company that might have a couple $100 million of profitability, albeit in an illegal market, assuming it's illegal still then, and not on a major exchange and without a constellation as a partner in their back pocket. So it's going to be an interesting play. I would have thought it would have happened already that we'd see some of the U.S. names actually outperform the Canadian names, maybe as an index. We haven't seen that yet, and I think that at some point in the next 6 to 12 months, it's way overdue, assuming things stay as they are now.
Right. All right, Matt, we'll leave it there for now. Great insight as usual. Thank you for joining me. We'll have you back soon.
Great, thank you.
Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. Did you watch 60 Minutes last night, Ed?
I did.
And?
Well, when they start talking about deep sea mining off the floor, I got interested because I knew Neptune was talking about at some, a few years back, 10 years back, 15 years back, there was a company called Neptune. I think it's the same company that's, anyway, yeah, they say that there's this area in the Pacific Ocean.
So Deep Green Metals is a company that was funded by Frank Justra's Fior Capital, among others, and is currently exploring an area known as Nori Area D, Clarion Clipperton Zone.
Yeah,
they've actually got a mineral resource estimate. So this project, you're saying it has been in other companies already?
No, not this one.
Okay.
No, I say
there have been other deep sea.
There's people trying to figure a way to get the mineral wealth out of the ocean.
Right. Okay.
Because it's mind-boggling how big it is.
So 60 Minutes did a piece on Deep Green Metals.
This company, yeah.
And they have a ship out there that is doing test exploration.
Yeah.
And they've done enough that they've come up with a resource estimate on one area called Area D. And this area is estimated to contain 383 million wet tons of nodules. The nodules are these small crystalline, or not crystalline, it sounds like they're naturally electromagnetically concentrated around substrates that are shells and bits of bone and stuff.
Probably like a pearl in a way. You know how pearls move around a piece of sand or something like that?
But obviously with lots of other non-useful stuff, because the grades are not as high actually as I would have thought, though the grades are spectacular, especially all these metals in one spot. But so 383 metric wet tons, grading 1.3% nickel, 1.1% copper, 31% manganese, and 0.13% cobalt.
So very rich in manganese for some reason.
Yeah.
Maybe they're magnetic.
Yeah. But that's interesting. So this is obviously probably there's more of these metals here contained across the entire deposit, which stretches from Australia to Mexico, or Australia, from Hawaii to Mexico. And yeah, incredible. Could be a massive deposit. Now the question is, we still don't know what the metallurgy looks like to separate these into their constituent elements. Though metallurgy has not historically been a real huge deal stopper, but we don't know.
We don't know.
But that much copper coming onto the market.
Well, they said that the elements contained in these nodules is what you need for an electric battery. And so with the world transitioning from fossil fuels, you know, they're trying to say, hey, isn't it just coincidental that this is what you need for an electric battery?
Sorry, this is 383 million tons.
Yeah.
Not metric tons.
Yeah.
What an idiot I am. 383 million tons, grading 1.3% nickel.
That this is this company's concession.
Yeah.
Not the entire concession.
Well, just one area, area D.
Yeah, area D. For deep.
But there's a lot of controversy around it because there's some oceanographers and environmentalists are proclaiming the area should be protected. And
well, there you go. There you go.
Yeah,
that's a big factor. The guy who's the captain of the boat, the ship, said he was also you talk about mining, and they asked the question, how can you be a mining guy and be a environmentalist at the same time? And he said, well, I'd consider myself more of a environmentalist. Some of that effect. But you have to watch the show, and you could probably go on and watch it.
Yeah, you can watch it for free at cbsnews.com.
There you go.
But really interesting thing. Okay, so let's see. We also have speaking of mining, a gentleman named Terry Lynch, who's the CEO of Chilean Metals, was here. He's also the founder and managing director of Save Canadian Mining. And this is an interesting aspect to the mining industry that is not well understood by retail investors, but we'll let him explain it to you. Here's that interview. I'm joined now by Terry Lynch, Executive Director of SaveCanadianMining.ca.
.com.
Okay, very good. Terry, tell me, what is SaveCanadianMining.com all about?
Basically, fundamentally, we believe there was a rule change that happened in 2012 that inadvertently has damaged the junior mining industry in a big way. And a simple fact would be, since that date in October 2012, the TSXV is off 245% more than the commodity index. So what we think we have in junior mining is not a commodity problem. Commodities go up and down, it's a cyclical business, but it's a structural financial problem, and there needs to be a rule change, and we need to go back to the rules that worked for 142 years and made Canada the mining finance capital of the world, and we got to get back there, and that's what Save Canadian Mining is trying to do.
Okay, and what is the essence of the rule?
So the essence of the rule is that up until that point in October 2012, for 142 years, you could only short a stock if it was done on an uptick, called the tick test. And they abolished that rule, IROC and Canadian Securities Agency. And so what happened is that, with that decoupled, effectively, the predatory shorts would come in, and you see them even now on financings, et cetera. And they can basically, they're more powerful than the longs. Because if you're a long, what used to happen in mining financing is that you would go and you would find, the Eric Sprotts of the world or the Frank Marcius or the, Sheldon Wintashus, all these, legendary sort of early stage resource investors. You'd pitch them on your deal and your resource program, and they would say, okay, I like it or I don't like it, but they would take 10, 15% of the deal, never take more. And they would sort of support a deal through a cycle of exploration. And at the end of the exploration cycle, either discovery was made or it wasn't, and stocks were revalued, which is how it should be, right? Unfortunately, what happened when they broke that, or they got rid of the TIC test, all of a sudden the ability for those financiers to protect a stock through a cycle was wiped out, because they couldn't go more than 20%, otherwise they have to buy the whole company, which wasn't their business. They were about spreading the risks, hoping one of the betted companies makes the discovery, pays for everything. And that's basically how Canadian mining grew from nothing to being the dominant position it was. So we broke that rule. I don't think it wasn't a targeted rule. It was sort of an inadvertent rule change. So it's hard to see, other than for the shorts, what's in it for anybody right now. So we want to change it, get back to what we think will be normal financing markets, and at a perfect time, because Canadian mining's literally on its floor at a 100-year low in stock prices.
Sure. Short strategy investors have been known in the past to employ questionable methodologies for driving a stock price lower, including, causing publication of questionable information about an issuer, which, obviously, especially in a market like mining that can go through periods of weakness and strength, investors get spooked easily. Yep. And the general rule for a sophisticated investor, if somebody's going to write something bad about a company, I don't care whether it's true or not.
There's fire, right?
Exactly. I'm just going to get out now, and if it's going to be okay, well, the worst I can do is buy it back cheaper.
Right.
So, yeah, I can see where, Canadian mining has really taken it on the chin. I mean, they're really been dragged through the mud. Commodities prices, the quantitative easing that causes money to flood into technology and away from things like mining. But so who caused that rule to be changed, and what was the motivation?
So I mean, we're going back. I remember when it happened, because I was literally just in my first mining public company role. And they announced it in 2011, and I remember going to the hearings and saying, guys, I think this is a really disastrous idea, because I've been in the small cap space, and small caps are very event driven. You have to get to a certain event, and either I'm going to make a phase 1 drug, or or phase 2, or I'm going to make a discovery, and then things get repriced at that point, the stock valuation. But I saw this as as this would stop that, and predicted that. But the basic argument at the time was the exchanges wanted to allow algorithmic trading. Okay, so the robots, and because effectively, I think that the rationale for that was the world was moving that way. Obviously, New York had moved that way, so I think they had to do that somewhat on a competitive basis, just to keep people interested in their markets. But they also, obviously, exchanges make money on trading shares. That's where their biggest profitability drive is. So having the robots whacking back and forth every little second is profitable for them. So I think that's what they wanted. But I think what happened is the regulators looked at that and said, okay, we're okay with this. We can see technology's moving there. We sort of have to, play ball with that. But we're concerned that there's only one exchange, so we need to have multiple exchanges to keep competition, so that you're not gouging people on the trading of shares, which they were fine. They're saying fine, that's okay. So they said, okay, we have multiple now. Now we have, I think there's 14 different exchanges or something in the country. They call it the dark exchanges. But the problem became, well, how do you to tell what was the last trade on a stock? So if they're trading, let's say they're trading Chilean metal stock, if it trades on a TSXV, it's one price. It trades on these other exchanges, maybe at another price. So how do we know what was the last? So what's the last tick, and how do we know we were up or down from that? Nobody had the answer to that. So they said, oh, what? It turns out we don't need that anyway, because we have this Harvard study that says that we looked at the Russell Index, and we determined that short selling is a good thing, market efficiency, and that whole theory. And the reality is, if you looked at the Russell Index, the smallest company is like probably $1 billion or something. It's still a mammoth country, whereas you look at, there's probably 1,500 companies in the TSXV that are under 20 million. So it's completely not apples to apples comparison. So, and it doesn't deal with the practical realities of a public venture capital market, which is what we have here. And unfortunately, the powers were focused on that, and they went that way. And what's happened is obviously the devastation of the industry in this period of time. And it wasn't, as I say, I don't think they wanted to do that. Certainly wasn't an outcome they're looking for, but it is an inadvertent and a very serious problem. And luckily now we got a chance to change it. And I think we've had some early conversations with the Ford government, and we've talked to the OSC, and I think they're coming to grips with they didn't really realize it had gotten this bad, and maybe this was a problem. And so I think people are open-minded, and so we're trying to put together the business case, if you would, to say to people this is a rule that can and should be changed. And there's nobody other than the shorts who are. It's hard to believe that we're doing anything for those guys. That the individual investors and the individual companies would benefit greatly from this change. So it'd be hard to imagine we couldn't rally the political support to push it through. So that's what we're hoping to do.
Okay, so how can viewers participate in the advocacy?
So what we're asking for people is, if you want to sort of have fairness in the capital markets and reinstate this rule, then come to our site, savecanadianmining.com. There's an opportunity to donate to help the program. Just full disclosure, I'm a founder. There's obviously multiple people on this, including Eric Sprott, one of our legendary fund investors and mining gurus in this country, that have come together for this cause. We're not taking a dime. Everything's going into the advocacy of trying to lobby the government and explain the rationales and stuff like that. So all this takes money, unfortunately. So we have to fundraise. So we've written our checks, and we ask other people to consider writing. And we're not looking for, again, the mining world. We're saying to mining companies, we're saying, look, if you're under $1 million, consider sending us $1,000. If you're between $1 million and $10 million, consider sending us $5,000. If you're over $10 million, consider sending us $10,000. And any money that isn't used in getting the rule changed will be put into geological scholarships across the country. So it's a pretty very clean, very lean organization with a very clear focus to change that one rule. And the other thing that I want to change is when that rule change happened, what happened is that obviously a number of smaller brokers got wiped out. So institutions that used to sort of service the mining industry, because there wasn't any financing, of course you couldn't make any commission, and therefore you couldn't eat. So they've gone to other things, as we do when we're starving. So what's happened is basically that money's flowed into the other investment banks and banks, and they have had for some time, probably since the BRIAC days, a sort of names committee approach to investing. So if you want to do private placements with any of your bank brokers, typically you have to get approval on the names committee. Well, you're not going to get approval on the names committee for small junior mining financings. That's just not how it works. That's not their business. The problem with that is that they're sort of holding all the capital. And our view is that if individuals have brokerage accounts with the big banks and they have an appetite to play a small percentage of their portfolio in speculative investments, then why shouldn't they be able to invest in junior mining stocks? And why shouldn't their broker be able to bring that to them without undue hassle and bureaucracy from the banks? And they should get a fee, and that would be an open playing field. We're not saying to put widows and orphans in mining stocks. That's not what we're saying at all. We're saying, there securities rules exist to make sure there's a appropriateness for the client. We're saying abide by all that, but at least allow us the opportunity to sell and let the brokers decide if that's a good company they want to make a bet on or not.
Okay, well that's great. So savecanadianmining.com.
That's where we want you to go.
Okay, great. Well, we'll follow the story, and thanks for joining me today.
Great, thank you.
Anyways, so there you have it. Terry Lynch suggests that we can all do our part to save Canadian mining by sending them a little dough.
You know what? That you can this thing changed in the U.S. a number of years ago, and all I can say is, if you've got a company that people want to own, the shorts. If you shorted Microsoft, you shorted Amazon, and people do because they don't believe it, right? So it just happens to be that this shit that Canada it just looks like shit because it's all so depressed. But the venture is at I think it's at 85% of its high. 15% of its high.
What's that?
The venture.
The venture exchange is at 15% of its high.
Yeah.
15% relative to its all-time high of 3,200.
We're back in, say, 10 years ago, 10, 11 years ago. So look,
yeah, it's at 526 last
right
time.
Now, nobody's shorting penny stocks right now. Not at a penny.
No.
Well, maybe some traders are. Look at.
I think that the era of penny stocks and micro caps is coming to an end.
Yeah, we talked about that.
And I think that this is just solid evidence of that. The exchange, that is essentially the place where mining finance was dominant for 20 years, is now where it's falling to pieces before our eyes. And so
graveyard.
Certainly the lack of the uptick test provides an opportunity for short strategists to compound the negative sentiment towards the industry. And I think that's a minimum base case that we need in Canada, is the uptick rule. And also, I think they need to put a limit on high-frequency trading platforms.
Right.
I was at a conference where Rick Rule was presiding, and Rick Rule said, hey, high-frequency trading on the TSX venture would be a good thing, because we don't have it. But, HFT, very sort of glibly bypassing the point. But high-frequency traders, for the most part, catch a fraction of a penny front-running trades.
Well, that's what our buddy Simon's. That's how he made his money.
Yeah. Yeah, that's right. That's what Renaissance Technologies was famous for.
Yeah.
Trang Trin was here from TREC Brands last week, and that was an interesting conversation. She's developing cannabis brands that should soon be visible on shelves everywhere. I'm joined now by TREC Brands CEO and founding director, Trang Trin. Trang, welcome.
Thank you for having me, James.
Trang, tell me, what is the business of TREC Brands?
TREC Brands is a socially conscious cannabis brand house. Our business model revolves around tracking consumer trends and developing brands that resonate with the end consumer. So when we started this business in January 2019, it was really with the mission of using the spotlight on cannabis as a platform to do social good, where we are pledging to donate 10% of our gross profits back to the communities that we operate in. So since January, we've raised $10 million of private money. We've launched 3 brands, Wink, Bliss, and Thumbs Up. We've launched 2 products out into the Ontario market, and we've grown an amazing team of 14 people.
Wow, sounds intriguing. And so where are your products available?
Right now, they're available in Ontario, the Ontario Cannabis Store, and 90% of the Ontario legal dispensaries. In the next few weeks, we will enter the Alberta market, the Saskatchewan market, and also another province in the Maritimes before the end of the year.
Okay, so these brands typically contain THC and or CBD?
That's correct.
Ooh.
So Wink is our brand for the purveyors of culture all around fashion, art, and music. They're usually tastemakers looking for a good time. The product is a mid-range THC so that it complements your night out. Whereas Bliss is our brand that's more female-focused. We call them also the Cannacurious. That's sort of looking at getting into cannabis, and I think this one we focus more on a balance of CBD and THC.
Very cool. Okay, so how much do these beverages cost the consumer, just out of curiosity?
So we don't have a beverage, but our...
Oh, they're not beverages.
No,
I'm sorry. So what
that's
is the
okay.
nature of them? They're edibles then?
So Wink is a package of 2 half-gram pre-rolls.
Oh.
Yes.
Smokables.
Smokables. And they range, depending where you purchase them from, anywhere between $24 to $30 for 2 half grams.
Okay, so you don't grow your own cannabis for these. Do you have a partnership with an existing LP?
Exactly. So we don't touch the cannabis plant at all. We focus on the end consumer, and we work with some of the largest LPs in the country. So Northern Green Canada, Flower Corporation, AgriFarm, Aurora, CanMart, TerraSend. These are some of the big LPs that we work with to white label products for our brands.
I see. And what kind of development philosophy goes into the building of a brand?
So our product innovation roadmap is very data-driven. We take a look at what consumer trends and what they are looking for. Right now, we know that consumers are consuming 70% of the market is a flower product. But as we head into Cannabis 2.0, we're looking at trends in a more mature market like in California to understand where edibles, topicals, and beverages would play a role. So it's a very data-driven approach, and because the way our business model works, we can be very nimble and pivot as quickly as we can or as slowly as we can.
Sure. And what does your data indicate in terms of the split among dried flower, extracted products, edibles, etc.?
It varies, and it's very different in different markets, but right now at TREC brands, we're looking at about a 70% of dry flower, and that would also include pre-rolls, and then 10 to 15% edibles, and then the rest concentrates, so vape products.
Oh, okay. Very cool. And what is the anticipated uptake of non-smokable products in the Canadian market? Are you expecting it to reflect exactly what you're seeing in California?
I think it'll eventually get there. I think we have a lot of work to do in Canada to open up the retail distribution. As you've heard with the slow rollout of dispensaries in Ontario and many other provinces, I think as the market matures, we're probably 2 to 3 years away from where California is with their data.
Interesting. The proliferation of new brands in the consumer packaged goods space in Canada as a result of Cannabis 2.0, as we're calling it, is going to result in obviously an explosion in the different options that consumers have. How do you compete for shelf space with the, for example, Ontario cannabis stores and or the dispensaries that are operating here?
Yeah, it's a very exciting time for the consumer in terms of the optionality. I like to always say that Christmas time this year is going to be a lot of fun. But I would say that developing niche brands and brands that our consumers want will win the game. And I think that we've proven that with Wink Cannabis, where we went out and launched at the end of June our Wink #1 pre-rolls and have obtained that the #1 position in the premium pre-roll category in Ontario. And I think that has a lot to do with our branding and marketing efforts and the investor base as well behind TREC brands.
Sure. From your business model's perspective, how do you, where does your margin sort of come from in terms of what the producer needs and what the retailer needs? Somewhere in between, I'm assuming.
Yeah, so how we make money and how our producers make money as well is that after costs are taken care of, it's the wholesale price that we sell to the provinces, and we determine a fair split between ourselves and the producers. And I'd say because we do command a more premium pricing in the market, it's a win-win situation on both ends, where we've been able to help our licensed producer partners that we work with maximize the pricing that they are able to get with the product that they put out with us.
Sure. We're starting to see price pressure from the black market drive LPs to offer lower priced products. Hexo has Original Stash, for example, and it's price point is equal to that of the black market. How price sensitive do you think Canadian consumers are going to be? Are they willing to pay extra for a premium product, or are they more going to gravitate towards the cheapest and the most plentiful for the money?
I think that there will be both types of consumers, the ones that go for the high THC, the cheapest product in the market, but there's also your more sophisticated consumer that's looking for a premium product. I like to compare it to alcohol in a sense. For myself, at least at this age, if I'm going to a party, I'm going to go pick up a bottle of Moet, Chandon, champagne versus come and show up with Baby Duck sparkling wine. So
Right.
I think that the demographic that we are targeting are the ones with the that are looking to spend a little bit more money for convenience and also a premium product.
Mm-hmm. So the brand conscious aspect of consumers is what drives premium brand purchases. Do you think that the limitations on packaging and branding by the Health Canada is causing a challenge for brand-oriented companies like yours?
I'd see it as an opportunity, actually, for us to get more creative in how we are able to build brands. And with our investor base, we're backed by some of Canada's leading hospitality and entertainment industry veterans. We actually have the opportunity to use a lot of these event spaces that are 19 plus age-gated environments to reach our end consumer. I would say the past few months we've been able to do just that and have an email acquisition database of 30,000 plus consumers that are dying to purchase the next set of products that come out under our brands.
Sure. And is this going to be an opportunity for investors in the public marketplace?
Right now, it's not a great time to think about going public.
I'm glad you realize that.
And I'm very grateful that we are a private company. So our focus, and it's not to say that we will never explore that route when the time is right, but right now our focus is to continue to prove out and build out our current business model in Canada. And as 2020 approaches, we're also looking into different markets as well, such as the US or Europe.
Sounds like a pretty tight plan. It was great to hear about it. We will come back to you in due course, and I wish you the best of luck.
Thank you, James.
Thank you. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. Yeah, you tried one of those Wink pre-rolls.
Yeah.
And?
Yeah, I had, you gave me one last week, and you take a few puffs, that's it. You can't smoke the whole thing.
And then what happens?
Then you don't know, you don't remember.
You don't know what's going on? You were on fire the night that you smoked one.
As you were.
Well, I didn't smoke any.
No, but you're still on fire.
I didn't think I was on fire.
Everybody else did.
Really?
No, I don't know. No. Yeah, I was on fire.
You were on fire. It was good though. Yeah. So it smelled very good. I didn't get a chance to try any. I smoked quite a bit of my own marijuana this weekend though, as we prepare for the final edit of our documentary.
Really?
Yeah. We smoked. I don't know. We probably smoked about half an ounce of weed between the three of us.
Three of you?
Yeah.
What? Like sort of a
we
trio?
were chain smoking it. Well, we were taking turns.
Taking turns?
Because we were shooting it.
Shooting it?
Yeah.
Shooting it up?
No, shooting it on camera.
Oh, okay.
Yeah.
What about the? So was it good?
It was great, actually. Turns out I grow killer weed.
Is it better than the batch that's in that jar back there?
Well, I don't believe I smoked any of that. Oh yeah, I did smoke that. Well, that's higher in CBD. So when you say better, do you mean more potent for THC?
So is this the new one that you did on the weekend was higher in THC?
So I had two varieties, one high THC, one high CBD. Oh, and here is the... Boy, that's gone down a bit. Where'd all the weed go?
Well, spread it out. It's the gravity's knocked it down.
So that's what's going on? All the big buds are gone.
Whoa, big buds! What are those?
Oh, where's the sealer thing?
Sealer?
Oh man. What's that? Oh, okay. Anyways, so let's take a look at the cannabis stocks before we close it up here today. Cannabids. That's hilarious. I just typed in cannabids. Seen any cannabids in the market today? No cannabids.
Not a cannabids. A lot of offers.
A lot of canna offers. But
Wow.
they're coming down. Going down now. Okay, so slight improvement in the day. Arguably.
We're going to get close to a dead cat bounce, I think. I just
Dead
can't
cat
believe.
bounce. Well, what good is that?
Well, it's a trade.
It's a trade.
Look, if you're looking to get back your capital that you've lost because you bought at, I got news for you. You may be out of luck.
What does that mean?
Never again? When stocks go below about 45% of their high, they're called busted, and when they're busted, you can't. Like, there's just too many people underwater that act as a barrier.
Right.
Anyway, don't take my word for it. Just
Okay.
experience it yourself. Go buy some stocks here.
Let's take a look at the large caps before we close out the day here, just to get a look at, this is the large cap index, and
Yes.
Obviously no big news there. Looking at the index page, let's see. Cureleaf, again, is ending the day up 1.57%, 12 cents to 7.74. Charlotte's Web ending the day up 2.63%, up 36 cents to 14.04. And Cresco Labs is adding itself to that mix, up 1.6% to 7.62. Acreage Holdings actually recovered 4.95% today, up to 4.45, down from its IPO price of $25.
And it never traded at 25, did it?
It did trade over 25 briefly.
I mean, do you think some of these people will have recourse to these bankers that raise this money on these deals, that they're going to say, hey, you know what?
Well,
it hasn't done what you told us what it was going to do.
yeah, but there's no guarantees in this business, and you put your money down and you
I'll
take
tell
your
you,
chances.
when you get people in, well, why do lawyers, why do they always have these class action suits on companies where there's been a lot of, because they say things and then this doesn't happen?
T-God is down to 65 cents. That doesn't look like it's coming back anytime soon. Village Farms down 27 cents, 3.25% to 8.04. Organogram Holdings, 275, down 10% on the day, 29 cents. Why is Organogram bailing? We don't know. Anyways, so that's our sad story for this
So sad.
Monday, November
So sad.
18th. We will be back tomorrow with another show.
Too
and
bad.
At some point, it's going to be a happy story.
I just want to say
So
one
tune in
thing.
just on the off chance it's a happy story. We'll see you tomorrow.
Too bad.